Rachael. I work as an investment director in BP Ventures. I've been with BP since 2012. I've had roles across different energy technologies. I actually started as an engineer in our upstream oil and gas business, and in recent years I've been working in strategy and business development as one of the anchor co-founders as well in 2021 with Elders Council, so I have some experience dating back to them. My current team in BP Ventures, we seek to scale up the critical innovation solutions that we need to deliver on net zero, so we really look to leverage the corporate capabilities of a company like BP with bold ideas of external innovators. What I wanted to do today was to kind of complement the views that we have just heard with some views of ours on the opportunity for energy storage technologies. Also provide a perspective through the views of a corporate and a corporate venture capital team as to how we might support some of these technologies. And also, it was great to see the format here. Really want to kind of hear from you guys as well and find new connections as part of this as well as we look to collaborate to scale these up. So first of all, I just wanted to provide a bit of market context because I think it's quite important just to frame how we think corporately about this. As a ventures investor, but also a corporate, we look for scalability and value potential combined with great technology and teams. Alex provided some great views on the opportunity for long duration energy storage technologies and some of the drivers for uptake. I wanted to briefly touch on some of our views to the market opportunity just to frame how we think strategically about this. So you might be aware of BP's flagship Energy Outlook report, and this really frames how we think about strategy. And it also reflects some of the key risks and uncertainties which informs the problem statements that we seek to address as a venturing team, and also how we approach our sort of innovation internally in R&D. Consistent across their scenarios is major transformation of the energy system across all dimensions with large-scale electrification. This slide reflects demand, and we can see scale shifts in demand both in location and in electrification of all sectors. We see upside too across what we call our scenarios. Just as one example, the industrial sector is at an early stage of decarbonisation relative to some sectors. As Alex outlined, heat is a major component of energy demand and also energy emissions associated with this sector. And we see broad opportunity for innovation to address how this sector decarbonises, and a huge opportunity for long duration energy storage to support that as well, either in electrification or in direct heat supply, as Alex outlined. These shifts that we see also require large-scale infrastructure changes because the location of this demand might change, and we'll need to have investment for this as well. So in short, we see huge opportunity in terms of the market opportunity for these technologies. Linking this to the opposite end of the energy equation, to production and generation, we expect material scale up in low carbon energy sources to match the growth and changes in demand that I outlined previously. Solar and wind are now well recognised as being competitive, low-cost, low-carbon generation solutions, roughly about 14% of electricity mix today, and they've been growing significantly, about 15% per annum as of 2023. However, it's well versed, sun doesn't always shine, wind doesn't always blow, so we need these complementary solutions to provide that stability in the energy system, helping to address variability between hours, between days, between seasons and years, and also to help address the phase out of fossil fuel assets that we need to deliver on the way to net zero as well. BP have supported various energy modelling studies to help inform our views of the world, including that of the Long Duration Energy Council, and it highlights the need for different flexibility solutions to manage the short, mid, longer duration variances, and also the variations that we see between different regions as well. As with demand, we can expect changes in location required for these generation solutions, as well as solar and wind isn't always located where fossil fuel assets might be today. So again, sizable opportunity for these technologies to play an important role. We touched on some of these points during the discussion, but as the supply mix and demand mix evolves, we must connect the two, and this might require large-scale investment in infrastructure. This is just some IEA data which I found interesting, and as you can see, transmission and distribution infrastructure will have to more than double based on the scenarios and electrification that we see, and the existing infrastructure that we need will have to be changed out as well. Systems combining solar, wind and energy storage close to demand could be a complementary or alternative solution to some of these large-scale system challenges that we face. We already see traction in development of some of these solutions. We hear opportunity from our own customers, and we're also in action with some of our own projects as BP to deliver decentralised solutions as well. Again, long duration energy storage can play an important role here. So just linking this back to LDES, hopefully I've outlined the sort of scale and growth potential for this market in terms of electrification and flexibility needs. And we see huge opportunity for long duration energy storage and some strengths in the technology as we consider some of those problems that we have to address, including providing flexibility and stability to the energy system, mitigating transmission infrastructure risks that we need to deliver on net zero. We also see a number of these technology solutions at or reaching commerciality, which with the right support from finance, policy, and corporates like ourselves in supply and our customers in demand to support the decarbonisation that we need. We're seeing encouraging trends in terms of policy, which Alex outlined, both in terms of providing funding, but also in addressing some of the market design factors which might impede uptake just now. In terms of financing, both public and private, so from private sector and venture capital alone, we saw about $2 billion cumulatively as of 2023. And in technology, we've seen quite a growing pipeline. I checked BNEF and their track over 1,500 gigawatt hours of announced energy storage projects, and LDES representing over 10% of that. As BP, we see about 65 active companies in this space, so there's huge opportunity. And now to link this to the views of our corporate and also our corporate venture capital team. This isn't intended as a BP sales pitch, first of all, as well. I hope that this provides a bit of colour and insight as to how other corporates might think about this. Our strategy aims to diversify from resilient hydrocarbons to low carbon energy sources. And whilst we've laid out some of the strategic pillars which are outlined on the slide here, we still need innovation and new technology solutions to help deliver on our net zero goals. Part of the remit of my team is to find these solutions to support that long-term value creation for our business and our stakeholders. We're a large energy company, and so the drivers I outlined previously in the market fundamentals really inform how we see the world. More specifically, we have a material power trading business who's active across the value chain and serving power markets, with power trading desks established in the US, Europe, UK, Asia Pacific. We have direct customer base in our mobility, our commercial and industrial sectors, who are looking to us to provide direct decarbonisation solutions too, and also looking for electrification solutions. BP Pulse, who's our electric vehicle charging platform, is one example for how we're in action here. That part of the business already has about 29,000 chargers, and we're aiming for about 100,000 by 2030, and we'll need to provide electrification supply to help support the customer supplies that we need there. We have our own industrial assets too. For example, we've got a material refining business, and they require low carbon power as we seek to shift those assets to likes of bioenergy and hydrogen solutions. To deliver on this, we're already very active, so we're building up our power supply capabilities. You might have seen in the press that we've recently announced acquisition of Lightsource BP, which was our solar developer platform. They have a pipeline of about 39 gigawatts of solar over 19 countries. We're also very active in offshore wind, so we've now been awarded lease rights of about 15 gigawatts of generating capacity. Managing intermittency associated with those new assets is really critical to how we show up as a reliable energy supplier to our customers. This also plays to the strengths of our trading team. It's interesting when we have consultants come in, a lot of people I think externally see us as an oil and gas business, but a lot of our consultants come in and actually see us as a trading business, and they get really excited by these solutions as to how they can optimise value through the trading desks that we have. As a global company, we have a very mixed customer base, so mobility customers, industrial customers, and we really think that we need a portfolio of solutions which also matches the kind of global relevance that we have as a company. We're already in action, so we have, through Lightsource BP, short duration battery projects. We'll have existing ventures investments in long duration energy storage, one company called Phyllis, which is a liquid air company, and we're also exploring longer term solutions. I know that there's some debate about whether hydrogen's a long duration energy storage, but we see opportunities there into the future as well as from a chemical perspective. Now, just to link this to my current team as a corporate venture team, so we play a key role in supporting the road to commercialisation of these solutions. As a company, we have a rich internal R&D history. We've got over 750 scientists, but we recognise that we need to work with the external innovation ecosystem to remain competitive into the future. My team in BP Ventures, we act as that connecting glue between that external ecosystem and corporate BP. How does this look? We seek solutions which have synergy with our strategy, and that can also create optionality for us into the future. We also look to leverage our broad and mature capabilities to provide startups with the support they need for success. This could be via commercial and finance support, policy, governance, in addition to technology support that we have through our existing capabilities and businesses. Typically can look to support companies in technology deployments in our projects or co-development with our internal experts as well. We have a deep network with the startup ecosystem, and many of our VC partners are here today as well. Since launching in 2007, we have deployed over 1.2 billion in capital, and we've backed about 75 startups. And we've seen this value return to BP and our startups through various mechanisms. For example, some of our investments are now strategic suppliers to our operating business. We've acquired some of our investments within Power Trading Group. We acquired Blueprint Power and Open Energy a couple of years ago, and they're now part of that business line. And our venture activities also informed some of the organic decisions that we've made as a business. So for example, our bioenergy business was seeded through the venturing activities that we performed tens of years ago. And just as an audience of investors, I wanted to end by kind of reinforcing the opportunity importance we see for collaboration across this capital stack. I like this schematic from Sightline, which I'm sure a number of you have seen. As a venturing team, we seek to provide the patient capital and capability support to de-risk the solutions for commercial deployment. As of last year, venture capital in clean energy was about 20 billion per annum, but the IEA predicts that we need over 1.2 trillion per annum across energy technology solutions to deliver by net zero, and that's in 2030. So venture capital can't do it alone. We need collaboration across this full stack to be successful. Part of what excites me for working for a corporate and a corporate venture capital team is driving these connections. So we have access to deep network from early stage R&D through to scale investors. I outlined how my team approached this. So we seek to de-risk and integrate these solutions, for example, through projects or assets and access to our people. And our corporate teams have the diverse capabilities to drive that value, for example, in our power trading teams. In short, we see a huge opportunity for LDES to play a role as we continue to evolve our strategy and delivery. So that's all I had time for. I don't know if that was 10 minutes, but I have time for some questions, but equally I'm keen to hear your perspectives and engage in discussion and hopefully build some new connections as well as part of this.